The geopolitical thing is quite simple. There's no way that China is going to continue to supply silver into the global market when the US has decided that it is a critical mineral and they've got to start accumulating it. Are the Chinese going to supply it to America? Are they hellers like? They certainly are not. So you can see that, this is a real crisis developing. The idea that silver could easily go up to somewhere like $300 or $500 dollars an ounce, I think is eminently possible. And on top of that, if you look at the price of gold, so we're now linking it, if you like, through the gold-silver ratio. I mean, basically what the price of gold is doing is it's reflecting a declining purchasing power of the dollar. We are going to see a massive decline in the purchasing power of the dollar by the end of this year.
A perfect storm of surging demand from retail investors and rapid consumption from manufacturers ramping up solar panel production ahead of expiring tax rebates resulted in the largest single month of silver imports in China's history, according to a report from the Kobeissi Letter. China's silver imports surged to a record 836 tons in March 2026, driven by intense retail buying as a gold alternative and massive solar industry demand, far exceeding the 306-ton 10-year average. Prominent stockbroker and expert Alasdair Macleod explains that the idea of China moving toward a silver-backed system is still speculative, but the real issue is a growing imbalance. Industrial demand for silver is exploding, while investment demand is also rising. China had been quietly supplying silver to global markets for years, helping cover a persistent supply deficit. However, he points out that China has now begun holding onto its silver instead of exporting it, likely because its long-built reserves are being drained by massive demand from sectors like solar panels, electronics, and defense. Moving forward, this shift could trigger a major supply squeeze, especially as geopolitical tensions rise and countries treat silver as a strategic resource. Referring to market dynamics, he mentions the possibility of silver reaching around $300 per ounce under extreme condition. Recent developments support this view, with China tightening control over silver exports and global supply chains becoming more constrained, increasing the likelihood of sharp price movements in the coming years. If you're ready for unfiltered truth and sharp market analysis, hit that subscribe button. Let's explore the latest insights from Alasdair Macleod's recent interview.
Whether the Chinese are thinking about putting the domestic yuan onto a silver standard while it's on a gold standard for international trade is obviously a speculative suggestion. No, the problem, I think, is that there is a clash between industrial demand, which is soaring off the charts, and investor demand, or, if you like, demand on a monetary basis. It was interesting because the chart which everybody saw was posted by Bloomberg. Now, what Bloomberg did not post was a chart showing, if you like, the China's exports of silver. Now, this is very, very important because China exports silver in the form of bullion, or it did rather, in the form of bullion and powder and so on. So, the export statistics cover all that. Now, what the Chinese government has been doing is it's been supplying silver into the Western markets, which explains why we have the last 7 years of deficit, if you like, between supply and demand, without knowing really where, that imbalance was really sorted out. It was really being done by China out of her accumulated stocks of silver. She was trying to control the price. The interesting thing is that if you look at her exports, she has been exporting, I think I made a note of the numbers, in 2024, she exported 4,200 tons. In 23, 4,083 tons, etc. Now we're looking at figures like, sort of 137 million ounces is what she did in 2024. If you look at that Bloomberg chart showing the imports, in that year she imported a figure like 300 odd tons, I guess, 330 tons. Now, what is absolutely amazing is that in 2025, China ceased exporting silver entirely. The figure for 2025 is zero, absolutely zero. So why is this? I think basically China has sort of realized that the demand for silver, I mean, with nations like India getting into the photovoltaic industry, producing huge amounts of these solar panels and all the rest of it. Plus, obviously, also the defense applications and all the rest of it around the world, electronics applications all around the world and all the rest of it. The drawdown on her silver stocks, which she has accumulated over the last, I think, sort of 4 or 5 decades, has been massive. So there had to come a point where, they sort of said stop. And I think that's basically what happened in 2025. Plus, obviously, geopolitics was beginning to play into this. It was in September that we had rare earths suddenly halted the export of rare earths. Why? Because President Trump threatened China with an extra 100% tariffs or something. I can't remember the details, but and interestingly, it was literally within a couple of weeks of that was end September last year, within about a couple of weeks of that, I think on about October the 9th, the lease rate in London suddenly shot up to 40%. I mean, suddenly there was a huge, great shortage of physical silver available for delivery. This is fascinating. So if you look at the that Bloomberg chart, which I think you're probably referring to because it's all over the internet, the social media, there is a big difference, I think, between previous years, because if you look at the figures for previous years, the amount of silver being exported by China is well in excess of the recorded imports. In other words, there was if you like, they were literally feeding on a net basis silver into the rest of the world. That has now stopped. And not only that, but if you look at, there's a premium now, has been for some time, premium of about sort of 12, 13, 14% for silver in Shanghai. Now, a lot of this is explained by the fact that imported silver has to bear a VAT of around about 13%. But nonetheless, domestic buyers of silver in China are prepared to pay a premium. Okay, it includes VAT, but they're still prepared to pay it. So what's happening is that silver is basically being sucked out of the West in exactly the same way as gold has been sucked out of the West over the last 30-odd years. So you can see this is actually a major turnaround. And it's leading, I think. We saw this, the initial squeeze in last October reflected in a 40% lease rate on the LBMA. I think we're heading for another squeeze. I really do. And the real conflict is this industrial demand, which is soaring off the charts, plus monetary demand, if you like, from all around Asia, because, the last monetary metal which they tied their currencies to was silver. So you can see that there's a greater predilection for silver, if you like, as protection from the debasement of fiat currencies in Asia than there is with us. We've always seen it as the minor monetary metal, the real monetary metal being gold. So this is it's a fascinating juncture. You've got this clash, and it's really going to accelerate, I think, in the coming months. So that's basically the background to what's going on. And when I look at the report coming out of the major bullion houses and so on and so forth, I was just absolutely amazed. You had UBS forecasting a 300 million ounce deficit supply deficit in the current year. And they were saying, well, it'll drive the silver price up to $100 and then it'll come back down to 83 or something by March the following, March 27. These guys, they don't understand that there is a geopolitical dimension to this as well. So are the Chinese going to supply it to America? Are they hellers like? They certainly are not. So you can see that, this is a real crisis developing.
During the interview, Alasdair Macleod underscores that current fundamentals strongly support the likelihood of a major silver rally, agreeing with bullish forecasts and emphasizing that the market is heading toward another significant squeeze. He explains that for years China had been supplying silver to global markets, but completely stopped exports after 2024, even as the market entered its 7th consecutive year of supply deficit. Meanwhile, the Silver Institute estimates a smaller shortfall. Institutions like UBS suggest deficits could be far larger, potentially close to 300 million ounces. Seasoned expert Alasdair Macleod further explains that demand pressures are intensifying from multiple directions, including rapid solar panel production and growing retail demand in China. Based on this combination of supply shortages, industrial demand, and monetary interest, silver could realistically surge into the $300 to $500 per ounce range under extreme conditions. According to him, if gold continues rising due to declining purchasing power of fiat currencies, the gold-silver ratio could further amplify silver's upside, making such price levels increasingly plausible in a tightening and geopolitically strained global market. Let's jump into the interview.
I have to say that looking at these fundamentals, I think it is certainly very, very likely that Mike's forecasts will prove to be correct. We're heading for another silver squeeze. It's really the best way to describe it, I think, is the combination of China has been supplying the market up until the end of 2024. It ceased doing that completely. The market has been in deficit for the last 6 years. We're into our 7th year of deficit, which, according to the Silver Institute, is only something like 76 million ounces. But according to UBS, is about 300 million ounces. 296, I think, was the figure they came up with. So, it's going to be quite a bit greater, perhaps, than the Silver Institute actually forecasts. You have the production of solar panels accelerating. Oh, and incidentally, the Chinese actually turned around to their solar panel industry and said, please, can you slow down your production? Now, I think this is further confirmation that they're a bit worried about the stocks having run out and future demand, if you like, for industrial demand for silver and the way individuals are stacking silver in China. Remember, you've got about, 1.4 billion individuals there, and they are savers. The savings rate in China is like 30 to 35%. I mean, we're looking at over $5 trillion of savings looking for a home every year. And that's in addition to what is already there. Where do they go? Property? No. Stock market? Maybe, but not really. It's all been going into bank deposits, and bank interest rates in China have been dropping. So that's less attractive. So you can see why it is that individuals feel that, the best thing we can do is buy gold, buy silver. That's what they're doing. So I think this, to answer your question, the idea that silver could easily go up to somewhere like $300 or $500 an ounce, I think is eminently possible. And on top of that, if you look at the price of gold, so we're now linking it, if you like, through the gold-silver ratio. Basically what the price of gold is doing is it's reflecting a declining purchasing power of the dollar. We are going to see a massive decline in the purchasing power of the dollar by the end of this year. Now, the reason I say that is because of the knock-on effects of Hormuz being closed. I wouldn't be surprised if the Houthis start kicking off at the Mandeb Straits at the bottom of the Red Sea and close off effectively 6 million barrels a day coming out of Yanbu and effectively closing off Suez. So, there's the implications of this are going to be really quite terrifying. And I mean, one of the big things which people latched onto earlier on is that, of course, the downstream petrochemical products, particularly things like fertilizers, phosphates, sulfurs, and so on and so forth, that's going to really push up food prices. Now, what China has done is it turned around and has banned the export of fertilizers. So what you have got is a knock-on effect, not just what's happening in the Gulf, but you've also got major exporters of these vital commodities saying, well, hold on a minute, we better hang on to what we've got, which basically, if you're a net importer of these things, you are out in the cold. So, this is very, very serious. And how does the Fed respond to this? Well, for a start, it drives up bond yields through the roof. It puts all G7 into a debt trap. And they have to raise interest rates. Unless, of course, they decide that it's actually politically better not to, in which case they're sacrificing their currencies. So, if you ask me what gold is going to be at the end of this year, I mean, it's just going to go through the roof on the back of these dynamics. It's as simple as that. So then you link through the gold-silver ratio into silver, and you could be seeing $300 to $500 quite easily.
Experts at JP Morgan and BlackRock maintain a strong outlook for silver, with predictions that the price could reach $100 per ounce by 2030, or even within 2026. Recent trends suggest silver is increasingly being treated as a strategic resource. China's record-breaking imports and tighter export controls indicate a shift towards securing domestic supply rather than feeding global markets. If China continues stockpiling silver while global demand keeps accelerating, could the world be entering a phase where silver transitions from an industrial metal into a critical monetary asset once again, and are investors already too late to recognize this shift? Let us know what you think in the comments. If this video brought you any knowledge, give it a like, subscribe, and ring that bell so you're always in the loop. See you in the next video.